Dan Greenhaus, there might not be a reason in there. Sometimes these stocks move in crazy ways in overtime, right? Nutanix went down and then it went up, right?
Listen, Zscaler is a $250 stock. They're going to earn $3 next year. So it's not exactly a cheap stock. There's not a value play. And when you are trading at that level of a multiple without commenting on the earnings or the value of the company as an investment, a 6% drop after hours, even an inline report might be sufficient to drive that type of a result.
Well, on this one, we're going to want to hear from the CEO. And not today, though. Jay Chaudhry is going to break down these results in an exclusive tomorrow right here on Overtime. Mike, we've seen different storylines playing out in software, particularly in security during this earnings season. CrowdStrike had a report where not only Palo Alto Networks had a report where not only did it go down, it brought down CrowdStrike and Zscaler, but then they kind of bounced back from that. And now you got some choppy action in Zscaler with this report in Overtime today.
Yeah, it'll be a test of what I said earlier about how you've had these little mini blow-ups that have not necessarily held back the overall subsector for a while. And so we'll see if that does play out. I mean, I'm looking at things like Snowflake today. It didn't really seem to have coattails in terms of how the rest of the market reacted. So I don't know. At some point, it does feel as if people are getting a little bit overzealous in applying kind of an AI story on a lot of different things, and you're going to have to separate the bogus ones from the real ones. And this is part of that process.
I feel like we're in the market right now in this meta sort of way, Dan, because we were trying to talk about industrials, and then all of these AI-related earnings started coming out, and we started paying attention to that instead. So when you look at where there's relative value, how does technology look and sort of this AI trade versus what you see in industrials, even though we've got industrials, a lot of them trading near 52-week highs?
Sure. Well, the thing with value is, let's take Dell and HP, for example. Both of these stocks are quite cheap. Hewlett-Packard is actually cheaper, I believe, than Dell. Dell is called a 15 times multiple. HPE might be a single-digit multiple, and obviously, after posting earnings, Dell is up 15% and HPE is down 6%. So value is relative, and it's in the eye of the beholder. It's the famous saying, price is what you pay, value is what you get. So whether it's the industrials trading in the mid-20s, or some of the tech stocks like NVIDIA trading in perhaps the 30s or even higher in some of the more volatile names, you're looking for investments that are giving you that are on the leading edge, so to speak, to borrow a phrase, of this investment that's going on. And there's a big debate about whether this is 95 or 99. Dan Ives is a big proponent of this argument on air. And there's a lot of pushback on this, on the idea that the story is much more well-known. The AI story is much more well-known today than was the internet story in, say, 94 or 95. And that's a larger conversation. But the point of the story is there is tremendous value being created here. And you see it, demand exceeding supply, demand exceeding supply. That, in the short term, is going to trump any relative value argument between sectors or industries.